Hey everyone, and welcome to my channel. I wanted to go over how to do payroll journal entries. So I set up this example payroll, and basically what I'm going to show you is how to create journal entries to input this information into your accounting software. Now you only need to do this if your payroll processing software is separate from your accounting software and it does not sync. So if you use QuickBooks Online for your accounting and you use it for payroll, you're not going to need to do this. And also, if you use QuickBooks Online and you use Gusto for payroll, you don't need to do this because you can set up Gusto to sync with QuickBooks Online. So those are a couple of examples. Check with your payroll processing software to see if it syncs with your accounting software. So in this example, I just set up some pretend employees. I put their gross pay over here on the left, and I set up a reimbursement just so I can show you how to enter that. Their withholding taxes are in this second section. They have federal withholding, Social Security and Medicare, which is FICA taxes, and their state income tax withholding. And then they also have some deductions. They have a 401k plan that they contribute to. They pay part of their medical insurance, and they also pay for disability insurance. And then over here on the right would be the employer section. This would be for the taxes the employer pays. They match the Social Security and Medicare taxes that the employee pays, and they also pay some unemployment taxes and contribute to the employees' 401k plans. So those are all over here, and then there's a section at the bottom for the totals. So we're going to look at how to put this into a journal entry. I'm going to use Excel just because that makes it easier, because I can set up formulas and let Excel do the math for me. But you could also use Google Sheets, or you could just enter it directly into your accounting software. And I will make all of this available on my website so that you can download this and use it as an example for yourself. So this is my Excel spreadsheet. It has a column for the account names, debits, and credits. And I have a formula built in to the bottom to make sure my total debits equal my total credits. The first thing I'm going to do is debit my salaries expense account for the salaries of the employees. And then for the reimbursement, I'm going to debit whatever account is related to that. It could be office supplies, it could be travel, it could be marketing. I'm just going to say that it was office supplies expense for example purposes. Okay, and I just want to point out that there's no specific order to do this in, as long as your debits are in the debit column and your credits are in the credit column and you have the right accounts. Okay, and then I also want to put in my payroll tax expense. This would be the taxes the employer pays. These taxes are an expense of the business. So I'm going to debit payroll tax expense for those, and I am just going to go ahead and add these up within Excel. And it would just be these four numbers right over here. Okay, it looks like they pay, as I said before, they pay for part of their medical insurance and they pay for disability insurance. And to make life easier, I'm just going to deduct this directly from those expense accounts. You could have payables in place and do adjusting entries, but just to keep it simple, I'm just going to use the expense account. And those would be credits. Usually an expense is a debit, but we're subtracting from the company's expense because the employee is paying this expense. And then I'm going to credit the taxes payable accounts. So I typed in all of my taxes payable accounts. These are withholding, taxes that were withheld from the employee paychecks, and taxes that the employer has to pay. These are all held and then sent to the appropriate tax agencies. So for now, we're going to put them in a payable account. For FICA taxes, I'm going to need to add up the employee portion of that and then also the employer match of that. And then, of course, unemployment taxes. Most states have the employer pay unemployment taxes, but I believe there are a few states that have the employees pay the state unemployment taxes. And then another thing I'm going to want to do is factor in this 401k plan, the $223. I'm going to assume that your payroll processing software does not pay this for you, and you are going to have to pay it separately to the 401k administrator. So I'm going to put this for now in a 401k payable account. And then at the end, I'm going to credit the checking account, payroll checking account, or you may use your operating account. But this is going to be a credit for the net pay. Now, a lot of times the payroll processing software will also go ahead and take the money out of your checking account for the payable accounts, for the taxes. Some of these they would pay right away and send to the tax agencies. And then some of them, they are going to hold the money in their checking account and then pay those on a quarterly or yearly basis, depending on your requirements. So we are going to factor those in and show that we're going to pay those. And then we're also going to show one other thing before we do that. We're going to show the employer contribution to the 401k. This is going to be an expense of the business. You could call this retirement plan expense. A lot of the companies I've been working for lately call it profit sharing expense. But this is for the employer portion, their match. Okay, now we want to go back to these taxes because, like I said before, a lot of payroll softwares will go ahead and deduct these amounts from your checking account and go ahead and pay them for you, or hold them to pay them quarterly, yearly, whatever the case may be. So when they owed the money or showed that they owed it, it was a credit. Now we're going to show them taking care of it or paying it. So we're going to do the opposite, which would be a debit. And then we're going to credit the payroll checking account for the total. And then the last thing that I would want to do is take care of paying the 401k plan, the employees contributed, and the employer matched. So right now there's a credit in the 401k payable account for these two amounts, and you're going to want to pay that, either send a check or do an online transfer to pay the 401k payment to the 401k administrator. So you would just debit 401k payable for the total and credit your checking account. And that's it. Hopefully this gave you an idea of how you could do your payroll journal entries. Keep in mind that your account names may be different than mine, and your journal entries may be different than mine as well, because some companies do things differently than